Hello guys, welcome back to my channel. It had been a while since our last video, and in today's video I'll be trying to teach and explain to you what is the liquidity, how does the liquidity work in the market, and how do we use it before executing our trades. So first of all, liquidity is a fuel for the markets. So understanding where is the liquidity is very important for us, especially before giving your order to the market. The liquidity is being created by the people with their orders. But how do we know or understand where is the liquidity and how can I use the liquidity for my own trade? In today's video, we will be learning it and then I will be showing you a real example from my own trades. So in this sheet, I try to explain every detail that you need to know before executing your trades. So now we are going to be reading this sheet together. So in forex trading, liquidity means how easily and quickly a currency pair can be bought or be sold without causing major changes in its price. A highly liquid market like EUR/USD, EUR/GBP, AUD/USD has lots of buyers and sellers, allowing trades to happen fast with very small price differences. In the other hand, low liquidity means slower trades. So, in the second step, we are going to be learning inducement. What does inducement means? A move made by the market to trick traders into entering wrong positions so that bigger players like banks or institutions can get better prices for their own trades. Inducement is used to lure the majority into taking positions on the wrong side of the market. As smart traders, we either want to trade after the inducement occurs or reversal setup or move in the direction of it, which is continuation setup. Liquidity equals correct direction. Remember, money always follows the liquidity. So we have three types of inducement. The first of it is average inducement. POI, point of interest. When mitigating a key area, we seek lower time frame confirmation or use a limit order to execute with greater precision. If you don't know what is the confirmation, do not worry about it. In the live example, I will be showing you and teaching you. So, in the other hand, we have ain't POI. When not mitigating a key area, we focus on lower time frame confirmation to execute with accuracy. So, time. Time is very important, especially when it comes to forex trading. You cannot trade any time inside of the session. We always choose the most volatile session for executing our trades. We have the most volatile sessions, first for London, and in the other hand, we have New York. So now we are going to be talking about continuation setup. When we are not making a medium inducement, we'll look for buying or selling in favor of it. But of course, before deciding it, we are going to be looking at Asia's highs and lows and try to identify the liquidity in the market. And in the other hand, we do have a reversal model. When we are not making a medium inducement, we are also looking for buying or selling in favor of it, which means it depends on the price moves. So in this part, I will try to show you how the manipulation is being made by the market. Let's say we are inside of an Asia session and it makes its move. So what kind of traders we do have in the market? Support and resistance, trend line, intraday structure, major structure, etc. etc. Now I'm going to be analyzing inside of this arrow and show you how the people are getting stopped out. Let's say I am a support and resistance trader. What happens? I see this level as a resistance and put my short position and put my stop loss at this level. And some of the traders will see this as a trend and put their buy position at this level and put their stop losses below of the trend line. But what does the price makes? It shuts the price all the way down. So how to avoid this kind of market manipulations? First of all, we are going to be waiting till the end of the Asia session and watch the price move before the London session starts. We want that the low of or the high of the Asia session is being taken out. So we may think like now the liquidity is going to be the other side of the Asia session. So before making that decision, we are going to be looking for a market structure shift in the market, and then we will wait for the price giving us an imbalance or order block in the market. Then we will put our position in the other side of the market. So here we do have a Euro USD currency pairs, and we will try to see how does the price makes its action and how does the liquidity is being created by the market, and also how the people are getting stopped out by putting wrong position based on their strategies. So we are not only going to be analyzing inside of the sessions and the liquidity by also understanding the psychology behind of the buyers and sellers in the market and why the traders putting their buy orders or sell orders at those levels. Keep in mind, understanding the candles or the trends etc is not only enough by itself, but also understanding the psychology of the market is a very important key. So let's start. What do we see in this price action? We are seeing a very bullish action, right? We have our break of structures. We are making an increase in the pair and then pulling back, accumulating, and then pushing all the way up again and then shooting all the way down. How does it happen? Now we are going to be seeing it. Here we have a market structure shift in the markets. We do have a break of structure in the markets. All the people at this level will be putting their buy orders. So what happens? Their stop loss is going to be at these levels. And some of the traders will take this level also as a support level. What happens? They will be also putting their buy orders at those levels. And some of the also trendline traders will be putting their buy orders also at those levels. That's what they see. But what is the reality actually? The price is getting affected by the level, of course, and then it makes a pullback again. But here we actually see an accumulation inside of the market, which means all the buyers and sellers are inside of it is making orders. Which means there's a many buy and short orders at these levels. Also, here we have a buy side liquidities as well. So as you can see, the people who shorted at this level, who see this as a resistance level, is being stopped out. All the people who have placed the short positions at this level is being stopped out. And what is next? All the people who have put their buy orders are getting stopped out. So let's focus what happened at the latest hour, last half an hour of the Asia session and also the price move before the London session. We have shot our Asia session low. Asia session low had a very high Asia low liquidity. So after taking the Asia low liquidity, what happened actually in the market? We have created a side liquidity in the market. So after this, we are going to be waiting for a market structure shifting in the market to accrue that the liquidity is above, but also the buyers are inside of the market. When the London session starts, the European traders are now inside of the market, which means very high volatility plus correct liquidity direction. We will going to be seeing a very aggressive move in the market. So I have waited till the end of the Asia session and also till the beginning of the London session just to see the price action and understanding. I have seen, okay, Asia low liquidity is being taken out. London session starts. So after Asia session lows liquidity is being taken out, I'm seeing a market structure shifting at this level. And then I am making back a pullback at this level inside of an imbalance. You may say fair value gap. So at this level, I will be putting my buy order literally at this level and then put my stop loss a little bit below of my fair value gap. Now the next target is going to be at least Asia sessions high. I put my position at that level and executed it. Took my take profit like 1 to 5, 1 to 6 risk reward ratio very easily. And then I would like to show you what happened after our trade is being executed. Let's watch the price. We are keep increasing and then the New York session starts. Now let's try to see Okay, we have executed our trade. So what happened? In the Asia session, we have seen all the people, how they get liquidated in the market. How does the Asia session prices being moved? We have waited till the London session and identified where the liquidity is. And also, here you see we had a very aggressive move after we execute our trade. Why is it happening? Because of the liquidity. Liquidity is a fuel for the market. That's why the price moved up so quickly and also will dump so quickly as well in the New York session as well, which we are going to be talking about. So what you need to focus on, the market is always creating a liquidity. This is also liquidity being taken out. This is also liquidity is being taken out. These are all double tops liquidity taken out, which I'm trying to mean to you. We have created a side liquidity by taking the Asia lows liquidity. And then the next target is going to be Asia highs liquidity. Now let's try to see what does the price makes after we finish our trade. We have taken our take profit. That's cool. And now let's try to see how does the price moves. We are still inside of London session. The price still increases, and then we are seeing some rejection candles inside of the market. And then I will take a look from the outside. Okay, I am seeing a supply zone at this level. This is a supply zone. The supply zone is going to be the area that probably the price is going to be rejecting from, and the second supply zone is going to be this level. Time by time you'll be identifying and seeing the supply and demand zones more easily, but it needs some time. So if the price doesn't guess a rejection at this level, the second one is going to be the target. So after seeing the rejections, I'm seeing a internal market structure shift at this level and a pullback, which means you can also execute one short trade at that level. But where does the price goes? The most important thing, the low of the London session, because now the liquidity target is in the market is going to be the beginning of the London session. And not only that level is being taken out, also the last sell side liquidities are being taken out. And one more thing that you need to take a look at, after that the price makes a very small volatility moves and also accumulating moves. Why is that? Because the volatile hours are now finished. The market is finished. Now we are going to waiting for the next day. But you see it, right? How fast the price moves with the liquidity. If you do not completely understand what is the psychology behind of the Asia session, London session or New York session, probably you are going to be losing money because you don't know which time you are trading, you don't know what session you are trading, and don't know, not anymore, the liquidity is in the market. So if you take care of these things, if you learn those things, the probability of winning trades are going to be increasing for you. So thank you for watching. If you haven't been subscribed to my channel, please subscribe and leave a like, and see you in the next coming up videos.